Good morning, everyone. Today is May the 20th, and this is Futures in 5 charts, taking a look at the markets. We are going to try and bounce off of this zone. How well we bounce off the zone remains to be seen because we've got a ton of cross current. We're sitting under a moving average. So I would say this. In general, the big spikes are going to give us downside pressure. We get up over 28.85, 28.87, all bets are off. We'll move into 29.19. But as it sits now, there's the defending motion up off of this edge. This is very technical trading. The question is, how well does the trading hold and into what edge? And so that really is what we're going to have to take a look at. I suspect the bounce zones are going to keep us in a wide range. People are trying to say, hey, listen, we're looking like an all out war with China. Whatever, right? To me, what I am looking at is a systematic peeling off of exposure to equities. That is simply what I'm seeing. And so this, to me, fades, bounces. People are going to take advantage of the bounce, peel off a little bit more, and we're going to sit in this wide range. In the end, nobody wants their economies to fall off a cliff. And so the powers that be are going to work on that space. Now, they are going to try to interject politically, but in the end, they want to be a stable government and they want to have as much of their cake and eat it at the same time. And that means they're going to try and work through all of this noise. Whether they do or not remains to be seen. But the power of the tools that we have in order to exercise control over each other in terms of trade wars and that sort of thing, those tools are very dramatic. And bottom line, this is a wide range of motion. No need to be particularly frantic about anything. It's just a wide range. Here we go. If we lose 38, 28, 38 here, we easily could get ourselves down into this area, 2807, 2826. Those areas clearly support zones. Buyers should try to come in, and see buyers are trying to come in here. The question is, how much success will they have? So if you say, hey, I'm going to buy right here, the question would be, okay, where am I going? And what's going to tell me that this is in trouble? Well, frankly, if you buy here and you don't start creeping up and over 29.40, 29.42, and you just sit around there, it's better to cut and run. You've got negative pressure here. This just says, hey, I'm going into resistance. A positive histogram where our moving averages are sitting underneath this zero line, it's going to tell us that all we're doing is bouncing into resistance. So you've got to have some thoughtful eyes there. If you plan on just taking off, putting a trade in and leaving, the better bet would be long and then have a bracketed order that gets you out at frontline resistance so you can take your money and run. But this is a very likely bounce zone. Okay, same thing in the NQ. It's just a little bit weaker, right? It's left this level from May 8th, which was, right around here, and it's significantly lower. Still bouncing, right? It's got a very noisy patch right here with a few gaps. So bouncing from here, pretty reasonable. If not, it slips down into the edge of this formation. But if you want to look at it, try to recover, it really needs to recover the 74.05. And then once it gets there, it's got to get back up over 74.29. Taking a look at the YM, this is building intraday inverse head and shoulders pattern, right? This is what we like to look at. This kind of motion tells us that we're likely to try at a higher low first, and then we move to the next edge. This area at around 25,579, very important support. Traders very likely to try to get themselves involved here. The question is, what happens? And we just have to wait on that, folks. If you say, hey, I think this is support, then mind the gap. So you look for your risk and you say, all right, if I expect it to bounce from there and I come down into this region, see, for me, because I'm moving with relative short-term momentum, which is trying to hold me up off of this area, I'm going to shoot for the bounce. If it fades, I expect it to bounce anyway, and so I'm going to give it some room. All right? But that's just my style. There's a very easy style that says, hey, I'm going to take my long, and if I lose 25.47, which gives me what, 30 ticks of a stop from here, I'm just going to get out and wait for either a failed retest of new resistance or a deeper dip into support so I can try again. You just have to be prepared to move ahead if you get punched in the face and you get stopped out, right? That's just something that you have to do. Okay, trend line here, still holding. We're going to move it. We're going to look at it coil around this line. So what do we expect? Bounce zone, potentially. You know, we had a pretty good build last week with the EIA, but I mean, it's not so incredible a build that we are sitting around thinking that there's global slowdown that traders aren't prepared for. There is less production because there is less consumption. So right now, we're still caught in this sideways range. I think we go low to high, back to low. I don't see any breaks, but if we do break coming out of this area, that would be a shift in the behavior of charts thus far. See, if we come into the 62.22 and we hold, it's going to be fairly different than the last 1, 2, 3 times that we held. This time it held coming up over the space. Here we have, this looks like a likely bounce to me, right? And this is getting ready to come in to support. So I suspect fades down here, I would love for it to come into a deep fade, is also a buy zone. Taking a look lastly at gold. Gold has a tremendous amount of cross current. If you look across day, week, and then tighter time frames like we're looking at the 6 hour, it is moving back and forth. But here's the thing. This is a pretty important support zone. Take a look at the momentum the last time it was sitting in this area. That's fairly bullish comparatively. What's the problem? The slope is the problem. And so what it has to do is confirm that it has the ability to get up over frontline resistance, and then when it pulls back, it'll move ahead. What's the big storyboard? The big storyboard is the deep fades are going to find buying action for gold. The question is, what's going to happen with our bonds? What's going to happen with the dollar, right? And the bonds are continuing to rise because yields are falling, right? And so this is at a key breakout area and it's still holding. So we're going to watch for that. A lot of people talking about how important the bond market is, and you can see why at this juncture. All right, take care, everybody. Good luck trading today.